I'm definitely a long-term Bitcoin believer, and I'm bullish on 2026 too. My base case is Bitcoin hitting $250,000 sometime during the year, possibly even pushing toward $300,000, $500,000 in the 12 to 24 months ahead if everything aligns. The main driver is straightforward. Supply is fixed and shrinking thanks to having dynamics and long-term holders locking coins away. While institutional demand keeps growing relentlessly, we're seeing nation-states quietly adding Bitcoin to their treasuries. Fortune 500 companies dipping in at the end. And now major players like Morgan Stanley, greenlighting their 17,000 private wealth, advisors to recommend 1 to 5% allocations for clients. When one big wirehouse opens the door, the rest follow fast. That translates into billions flowing in through familiar channels ETFs, 401ks, structured products without clients ever needing to touch a wallet. Bitcoin becomes the safe on-ramp. For traditional money entering crypto, advisors feel comfortable recommending it. Clients see it as the digital equivalent of gold. The exciting part for the broader market is what's starting to emerge around Bitcoin DeFi. We're finally getting close to non-custodial ways to lend Bitcoin, borrow stablecoins against it, and earn yield all without giving up custody. Institutions won't touch anything custodial, and most Bitcoin maxis hate handing over keys, so this unlock is crucial. Once reliable lending, yield protocols go live. That parked Bitcoin capital can flow into DeFi, generate passive returns, to naturally leak into quality altcoins. That's the bridge we've been missing. Bitcoin holders can earn attractive, relatively predictable yield without losing control of their coins. Trillions in dormant value start moving. Some of that will chase higher returns in the altcoin ecosystem, lifting projects with real utility. We're also seeing a potential decoupling for the first time. Historically, everything moved with Bitcoin, up together, down together. But stablecoins are becoming the new gateway drug. Look at Argentina. Roughly 1 in every $7 circulating there is now in stablecoins. And that's projected to grow massively. Whole economies are dollarizing via crypto rails. When you have stablecoin supply heading toward $1 trillion over the next few years, even 10% of that playing in DeFi means hundreds of billions in fresh liquidity for altcoins completely independent of Bitcoin's price action. Add in improving interoperability, shared liquidity across chains, and real-world use cases pulling in new users' privacy tools. Off-chain revenue flowing on-chain, etc., and the setup for altcoins looks healthier than past cycles. Of course, risks remain. Regulatory clarity is still hanging in the balance. See if we miss the current window. It could delay things until 2029 or later. The AI tech stock boom feels frothy, Nvidia alone bigger than entire countries. And a sharp correction there could spill over into crypto given the correlation. A MicroStrategy blope could create temporary turbulence too. But the structural tailwinds, institutional inflows, constrained supply, Bitcoin DeFi progress, stablecoin explosion are stronger than we've ever seen at this stage. Bitcoin reaching 250,000 feels realistic, not hopeful. It would put its market cap in striking distance of gold's, which makes perfect sense. Bitcoin is simply the internet's pristine store of value, now with yield potential built in. For altcoins, the path to new highs likely comes from these parallel inflows. Bitcoin capital seeking yield plus stablecoin users discovering DeFi rather than just riding Bitcoin's coattails like 20 to 1. Overall, 2026 shapes up to be the year the market matures. Bitcoin solidifies as digital gold, and real utility finally pulls meaningful capital into the rest of the ecosystem. I'm optimistic.